The Reserve Bank today cut cash rates to their lowest level in more than 3 years. The board blamed world economic factors, including slow growth and uncertainty in China, for the drop.
The rate was lowered by 1/4 of a percentage point to 3.25%. But the big four banks are yet to announce any move on mortgage rates.
It's the first time since 2008 the Reserve Bank has lowered interest rates 3 times in a calendar year. The Treasurer acknowledges a weaker economic outlook played a big part, but still says the government deserves credit.
What we are seeing here is what the government has been putting in place, which is a greater capacity for the Reserve Bank to respond with monetary policy.
The opposition doesn't see it that way.
Unquestionably, Australia is facing some economic headwinds. And of course, in the statement today, the Reserve Bank recognises that the carbon tax itself is going to have an impact as well.
The RBA says the carbon tax will affect consumer prices, but there are more pressing concerns. In his statement, Governor Glenn Stevens says the outlook for growth in the world economy has softened over recent months, and risks to the outlook still seem to be on the downside. A number of economists say those risks have been looming over the economy for some time. And they say the Reserve Bank got it wrong in the end of 2009 into early 2010, when it jacked up the cash rate 6 times in 8 months.
They were the most aggressive, most volatile central bank in the world after the GFC. They should never have hiked rates in the first place. It's great to see rates coming back down to levels they should have always been at. It would have been nice to see the Reserve Bank cut rates by 50 points today. I certainly expect at least another 25 points by Christmas.
Bank of Queensland was the first to move, almost immediately cutting its variable mortgage rate from 6.91 to 6.71%. The Treasurer says all banks should pass on the full rate cut.
That they should be allowed to crib from any rate cut is just plain wrong. Got to go.
The cut had an immediate effect on the value of the dollar, which fell against all the major currencies. The RBA says it wants the dollar to come down in value to increase Australia's competitiveness on international markets. Marcus Rubenstein, World News Australia.
And earlier I spoke to Westpac Chief Economist Bill